All right, everyone, here we are with ticker symbol WWR, Westwater Resources Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Westwater Resources Inc. had a run, reached highs here of about 1494. So if the bulls are able to break through that, that is one of the most important resistance levels to hit newer highs and newer resistance levels on its way up, moving further away from the 50-day moving average in an upward direction. So that's going to be a very important point, and if that could be broken through, this could start to test newer highs. But since that point, there was a rejection, and it has not seen those highs since. It actually was struggling to stay above the 50-day moving average. I had stated that the tug of war was going to be very interesting, and quickly after, it had started to fall, and right now today's resistance level was $11 and we got nowhere near it. So I'd write that number down just to keep it in mind. That's the highest point before this hard fall in the last couple of hours of the day. And now we have been in a very volatile spike up, falling down and leveling off, basically going in a sideways direction for this one. So we're going to look at what's important for Monday. So this is going to be an interesting beginning of the week for this one, and we're going to see what is important based off of the last couple of hours of the day. Now, this support level 682, I highly encourage you to write it down as well, because that can give you a sense of direction of where this is going and if it's going to test newer lows and newer support levels, because this is the lowest point in the bearish run at 682. Right now we're at 798. And I'm going to move this up to the new lowest point of the day today. That was the lowest point yesterday. That's the lowest point within this bearish run, falling down, and where we're at now. So 50-day moving average is important, which is 934. Let's go ahead and land right on that number, 934. It's jumping around, but 934 is our 50-day moving average. And as long as we're below it, the bears are in control. And the moment we cross it, the bulls are starting to gain control. So the bulls really ideally want to break through the 50-day moving average to get back into bullish territory. Now, before getting there, the first point they need to break through is obviously the first resistance level, and that is 850. Once 850 is broken through and turned into a support, it can give us as investors a sense of direction of where this is going, and if this is heading towards the 50-day moving average, ideally reaching the bulls goal to go ahead and cross it and end up in bullish territory. So 850 does need to be crossed, turn into a support to start to work its way up. On the other hand, we have our first support level here, lowest point in the day, and that's 708. That's what the bears want to go ahead and cross. We have been in bearish territory for a couple of days now, and this has been on its way down since that point. So it's very important, and I want to emphasize to pay close attention to the support levels and how this stock is reacting. How quickly is it moving to newer lows? Are the bulls trying to reappear and stop this from falling to newer support levels and newer lows as we speak? Or is it picking up and actually falling in volume, right? Actually sell off, picking up in volume of sell off and falling in a downward direction. The further away it moves from the 50-day moving average in a downward direction, the deeper into bearish territory we're going. And these support levels do signify that the bears are starting to gain control. So 708, if that gets crossed, I want to emphasize it. Pay very close attention to how this stock is reacting and what is going on. And are the bulls trying to reappear, or are the bears dominating the chart, tearing this one down, especially because we're already in bearish territory. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell by turning on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. Thank you guys so much for watching, and let's make some. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves, Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So Right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.